What's going on, guys? It's Lewis here with Crypto Elite. It's been a minute, so it's time for another market update. So many things have been happening. AI coins have been popping off. A new narrative called ZK proofs are on the horizon in Bitcoin in over a year. And people are on both ends of the spectrum right now. Some are very, very happy that we've had this huge rally. Some are very, very upset because they've been sidelined or they've been shorting it and losing a lot of money. So what we're going to start doing is I'm going to go over what I'm doing and what I've learned over the years through trading and through investing and through my time in the cryptocurrency markets, just the things that have helped me to hopefully help you out. And I'm going to try to make this video pretty nice. I'm going to try to edit it up a little bit, and then we could get into the charts. So there's a couple things that I want to start off saying. First off, before we actually get into everything, if you can like this video, that does help me out a lot and it helps motivate me to make even more videos. So just take 1 second, click that button. That would be awesome. Also, if you want to trade on the same exchange that I'm trading on, I use Bybit. I am an affiliate for Bybit, so I don't get paid to promote it. Hopefully someday I will, but right now I only actually get any money if you sign up using my link and then deposit funds. That's how I get paid, using Bybit. So if you want to trade on the same exchange that I do, there's a link for that down in the description. Also, if you've been following me, you already know that I switched trading terminals over to Altrady. I like Altrady because it lets you do a lot of things that you can't do on the exchange itself, and most importantly, it has IP whitelisting. So I trust it because not only does it have IP whitelisting, but I've actually talked to the lead dev multiple times, and I'm in contact with him almost every single day. I'm asking him questions, things like that. And he's worked in cybersecurity for over 7 years. Plus, Altrady is based in the Netherlands, which is one of the most strictest countries when it comes to cybersecurity, cryptocurrency, and financial regulations and things like that. So I now use Altrady to manage all of my different accounts. And so if you've been looking for a way to trade, to be able to put in your entry, your take profit, your stop loss, have multiple orders in, have stop loss cooldowns and other things like that you can't get on the actual exchanges, then Altrady is what I use, so I'll have a link for that in the description as well. And the third thing that I want to say is that I am still working on my course, so if you do want a complete crypto trading course, I will be coming out with that later this year. I know it's been a minute, but you know, I'm a perfectionist. I had to remake videos, I have to redo videos. So many things have changed with that, so I am working on that, so that'll be exciting. But more importantly, I'm going to be giving out free educational content. I want to make more videos. I want to get more into video editing. I actually purchased a short form content course and went through that. So I'm going to be trying to work very, very hard on short form content to hopefully give you educational content when it comes to trading and investing. And speaking of that, before we actually get into the charts, I do want to reiterate something, which is that I have multiple accounts, and this account that is on my YouTube channel that I put my trades on and things like that, this is my trading account, right? But I also have another account that I use for longer term swing trades. And if things don't go my way in my longer term swing trading account, then those trades turn into investments. And I basically just hold them, or I dollar cost average even further down and then potentially get out for a small win. So I do have two accounts, and all of the trades that I make in these videos are for my trading account. And I still have my trading account challenge. I put $30,000 into it a couple months ago, and I'm basically comparing that to whether I would have just held Bitcoin or just put the money into the stock market, the S&P 500, and held that. And I'm going to continue to track that over time. I'm actually a little bit down on that. I was up, I was down, I was up, and then I got a little bit too ahead of myself and went long before we actually had this recent dump, and that brought my account back into the negative. But no problem, because I'm going to be much more patient, and I'm also going to be taking my profits a lot earlier, because like I mentioned, I have my other account where I go for my home runs. In this account, in my trading account, I really just want to get singles. I really just want to make my trades, get my profitable trades, go in and out and make some money, and then move on to the next one. If I want to hold on to trades, I have my longer term swing trading / investing portfolio for that. And the other thing that I want to mention, which is why I'm actually bringing this up, is because prices are down very, very significantly, obviously. And what I know from being in the market and from doing my research and from other traders and investors and everything like that is that at these times when the market is really, really down, and it might go down even further, but at these times when the market is really, really down, getting into coins with great fundamentals really is the play, because you could get into these coins when no one's talking about them, when they are just launching, and they could give you extraordinary gains that will most likely outperform your trading account once you hold them into the bull market. Now, you can choose to de-risk from these high value fundamental plays. If you get into them now and say they do a 2x or a 3x, you could take your initial investment out. So if you put $10,000 into something and it's at, $20 and it goes up to $40, you made a 2x. You could take your initial investment out, and now the money that you have in that coin is completely risk-free. It's completely the house's money, and you could use the $10,000 that you took out to put into another fundamentally sound coin. And that is a strategy that helps you to preserve your capital, to help you not lose money, which is one of the biggest lessons, especially that Warren Buffett likes to actually say, which is rule number 1, don't lose money. Rule number 2, don't forget about rule number 1. So that is a strategy that you can implement if you're going for these low market cap, high value, high fundamental plays. And so I do have an account that I go into those with. And also I have my trading account, and these two accounts really work hand in hand so that I'm abreast of the market and I know what to get into. I know what to get out of. I know when there are good times to actually, on the macro scale, get into and out of the market. And that is why I have both accounts. And also with my trading account, I can take money out of that to use for just whatever I want, just to buy things in real life. But I think that at this point, especially if the prices continue to drop even further, putting the majority of your funds into the longer term fundamental strong plays can give you the possibility of making greater gains. But of course, they are more risky. So it's hand in hand. You already know this, and it always depends on your own personal financial goals and financial decisions. So I'm just saying what I'm doing. Most of my money is in longer term swing trading accounts that might turn into investments. And then my other account is this trading account. And then also I do want to mention that I am looking into bot trading. I'm trying to learn how to make my own bots, and hopefully that will make trading easier and I could share that experience with you. And the software that I use, I mentioned Altrady, it does have bots, but you do have to be a little bit more knowledgeable about them. So I'm learning them right now, and I'm going to update you as I learn more. So that's something cool to look forward to as well. And now that we're done with the intro, I think it's time to actually get into the charts. So first thing that I want to mention, and this goes hand in hand with my investing account and / trading account, things like that, is that the AI narrative, everyone is talking about it. Everyone has been talking about it for at least a week. I've been talking about it for months now. Look at my last videos. I'm actually going to make another video. I'm going to edit my video talking about how I was talking about them, when ChatGPT came out and everything like that. But these AI coins, I made a watch list, and I made this watch list thanks to CoinGecko. If you go to CoinGecko and you go to cryptocurrencies right here, you could go to categories, and under the categories, they have AI tokens. So what I did was I went there and I actually put all of those AI tokens into a watch list, and I've been averaging into them for about 2 months now. So they have obviously been amazing. It's been really good. Made my longer term investing account go up like crazy, which is awesome. But also, here's some alpha for you. I have been seeing a lot of chatter talking about zero knowledge proof coins. So Matic, Immutable X, Mina protocol. I know that we got into Mina in my Discord group super early and made a ton of money on that. So I'm super stoked about Mina. And then there's some other ones. I just saw A0. It looks really, really, really good on the chart. So these are definitely coins that I would be looking into because they have the narrative around them, and it's and crypto runs on narrative, right? So So if crypto runs on the narrative plays, then they can be the higher alpha plays. And obviously you want to get into these type of coins when before the narrative shows up in the mainstream, and then actually get out of them, because the narratives, they do end up running dry. However, one other issue why I'm bringing this up is because contrary to what most people believe or what most people are saying right now, all of the other influencers are saying these AI tokens, you should get out of them because it's all hype and everyone's going to be dumping on you and all this other stuff, right? Okay, for the short term, yes, I do believe that it's possible that most of the hype cycle for these coins has run its course, and they've gotten to their tops, and they're on their way down. However, AI is here to stay, and 2023, AI is the narrative. AI is the narrative for 2023. It should be pretty obvious that nothing is going to be bigger than AI in 2023. And because of that, I think that these AI tokens will be the best narrative plays and the highest gainers for 2023. Because think about this. If they come back to the good levels and then the entire market starts getting bullish again, and then ChatGPT blows up and gets bigger because a new update comes out and Elon Musk talks about AI, and Google's competitor to ChatGPT comes out and doesn't screw up, and it makes all these updates and everyone's talking about it and it's in the mainstream, what do you think's going to happen? Do you think these coins, this is it? It's just, I'll go to AGIX, which was the biggest gainer, literally the biggest gainer, and I'll see how far it went up. So it went up 1,000%. Okay, it went up 1,000% since December, right? Actually, a little bit more, 1,500%. So let's say it comes back down here, right? Let's say it comes all the way back down here. And then all of a sudden, all of those things I just mentioned start happening, right? And people start talking about it, goes to the mainstream. What's going to happen to these coins? You think they're just going to be like, that's it? Okay, it went up 10x, or FET, which went up 9x, 8x. All these coins, I still think that these coins have a lot of room to run, because I think that people will just buy them regardless, and they won't care. I seriously don't think they will care, especially if the entire market goes up. So I'm going to continue to dollar cost average into them. That's what I'm doing. I'm dollar cost averaging into these coins, and I'm literally not going to stop. I dollar cost average them. I like, for this one, CAT. I started getting into CAT at 20 something cents, right? So I started getting into here. Yes, I took some profit here, but I'm continuing to dollar cost average and buy on the way down. And if it comes down to 3, 5, 7, I'm gonna buy a ton more. Same thing with FET. If FET comes back down to 0.28, 0.29, I'm gonna buy more. If, any of these, the VXV, if VXV comes back down, VXV is actually a really nice spot, but if VXV comes down to 618, I'm going to get it, because I don't think that the run is over. And I think that people will be taking their profits way too early. The only thing that I have to say about this is that if Bitcoin does go up to, say, 28,000, then I will take a lot of my profits for almost all of my coins, because 28K is a huge resistance for Bitcoin, and I'm not sure that we're going to get over it. But I'll have to reassess from there. But yeah, that's what I wanted to say that, because I feel like it's different than what most people are saying. I think a lot of people are saying the AI narrative is over, and if you miss the boat, then you missed the boat. Sorry, too bad. I seriously think that all these AI coins, not all of them, but I think that some of them are going to be the best performers for 2023 because of everything that I just mentioned. And I also think that over the next few weeks, the ZK proof coins are going to do pretty well. And also the liquid staking derivatives coins like LDO and Rocket Pool, like Lido, and Rocket Pool, are going to do pretty well as well. They've already shot up, extreme amounts, but I could see these coins, reaching new all-time highs and getting even, going even higher, because this is the narrative. These are the narratives. I would absolutely take my profits on these LDO, on these liquid staking derivative coins, so these LSD coins, though, because I think this is an actual hype cycle that is not going to last very long, because it's a little bit Ponzi-nomic. But for the AI ones, I don't know. I have more faith in the AI ones. So with saying all of that, I think that's the intro. I think we covered the intro. I think we can get to the actual charts. and actually cover Bitcoin, Ethereum, the market cap, and all these other things, and try to put some trades on. All right, so let's get to it. Okay, so starting off on Bitcoin, you could see that we have had 2 up years, 1 down year, 3 up years, 1 down year, 3 up years, 1 down year. So I do think that this year, 2023, will end higher than the low, which was, where is it? $15,479. I do think that we will end up higher than the low. However, I am not completely convinced that the actual low is in. I think that we might come all the way up, go all the way back down, make a new lower low for the year, make a wick, something like how this had a wick down here, and then end up coming up and, maybe we end up around 22 or 28 or something like that for this year. So that's what I want to say about that. So I think that if you invest right now, and you just hold it, eventually we will be higher than what we are now in 2023. But it's obviously, I'm trading this, so I am not trying to just do that. What I'm doing now is, as long as things look bullish, what I do is I will simply buy Bitcoin, and then I will trade Bitcoin for altcoins to try to accumulate more Bitcoin. And when things look bearish, then I sell everything and I just trade coins and their USD pairs, so we have that. This is the crypto total market cap. And honestly, I don't know, I'm considering not even really looking at the market cap and things like this anymore. They do, obviously, they're very helpful. Okay, so for the total market cap, we came down from the highs and we hit the 2018 highs. And that is where we didn't touch it at first, but we did end up swinging and touching it before moving back up. And we're very close to that $1 trillion mark. We hit the $1 trillion mark last month and in January, and now we're sort of hovering around that $1 trillion mark. So yeah, $1 trillion does seem like a big psychological number to overcome. However, I do think that we still have a little bit more room to go up. So we'll just have to look at Bitcoin and play level to level, because that's really what I'm trying to do for this trading account. Before we actually look at Bitcoin, though, let's look at some of the market caps. So if we go to the altcoin market cap, you can see that it hit the altcoin market cap has been going down. And surprisingly enough, it's crazy because the altcoin market cap has been going down, but price has been going up. And that is something that you don't normally see. Let me go to the weekly time frame. So normally what you see is that when the altcoin market cap hits this level up here, there's a huge resistance. The prices for everything just start dumping. But obviously for December and January, mostly January, the prices for everything have been going up, especially Bitcoin, right? So what this is saying, this is actually a really good sign. This is a really good sign, because when this altcoin dominance level reaches, say, here, which is the bottom of the range, right? This is the bottom of the range, the top of the range, the mid range. If it reaches here, then that's a great time to go into altcoins, because basically the altcoin dominance level is so low, the natural flow of things is for a lot of capital to move from Bitcoin into altcoins. So the fact that it's going up, that it's going down, I like that. It's bullish. Basically, the market is bullish based off of this. And you could see the inverse of that on the Bitcoin dominance chart. So as the Bitcoin dominance chart goes up, the market tends to lose value as the Bitcoin dominant value goes up, dominance goes up. But obviously, Bitcoin dominance has been going up, Bitcoin price has been going up, and a lot of altcoins have also been going up. So this is overall, honestly, very bullish. So in my opinion, so we have Bitcoin, we have some bullish bias going on right now. You know, there's some bullish bias. Also, and I'll just do this really quickly and then I'll go back to that. On the weekly time frame for Bitcoin, you can see that we had our first bullish market structure break. So in a while, so we basically, I mean, on the weekly time frame, we haven't, like, this was a bullish market structure break of over here because it broke above these highs, which is really good, but it should have bounced from right here, but obviously it didn't. And we have not had a bullish market structure break. We just made a high, we made a lower high, if you want to count that, a lower high, a lower high, a lower high, and then boom, we finally broke through this previous high. And so now that's bullish market. So what that means is that I want to look for longs on the retraces. That's what that means. But before we go into that, I do also want to bring up the dollar. So we have the dollar, and the dollar and Bitcoin are inversely correlated. So whenever the dollar goes up, Bitcoin tends to go down. Surprisingly though, look at this. January 30th and February 6th. And this was January 30th and February 6th. Okay, actually, yeah, no, this is true. I have so much shit on this chart. Sorry for cursing, but yeah, look, January 2nd, January 2nd, January 9th, and January 16th, and January 23rd. Bitcoin was going up. Let's look at the dollar. January 2nd, dollar had a big swing failure pattern, bearish swing failure pattern. January 9th, dollar went down hardcore. January 16th, dollar went down. And January 23rd, dollar went down. Then January 30th and February 6th, dollar went up. And on Bitcoin, January 30th and February 6th, Bitcoin went down. And that's where the inverse correlation between Bitcoin and the dollar is. So what I'm thinking is that, okay, this is obviously like, this is the big supply zone. So I had this label, I actually had this plotted out, which is one reason why I haven't really been too involved in buying Bitcoin right now, because I thought that this was gonna go up and Bitcoin was gonna go down. However, things are, it still has the possibility to shoot down again back into this supply zone. And honestly, I would love to see this. I would love to see the dollar hit the 61.8, like down here at like 99 bucks, 99.178 actually. And I would love to see it do this and come down here as the crypto market like rallies. Of course, with Gary Gensler and the SEC and all of the regulations that are happening right now, that's a little bit unlikely, but if this happens, that would be pretty awesome. I do think that we can see the dollar come down a tad more. Right now it's consolidating, but I would like to see it come down. So if we go to the 12-month, you can see that this was a yearly swing failure pattern. So let me bring this like this and get this out of the way. I'll delete that. And so this right here, this was 2022. And for 2022, the dollar rallied so far up, and it rallied so high up, but then it ended up closing below the highs of the previous swing high, right? This was the previous swing high, and this was right here. This was previous swing high, and then it went down, and then it came back up, and it has swing failure pattern. So this is a yearly swing failure pattern. That's not really that good for the dollar. So that does make me bullish on crypto, but there's so many variables going on, and this is why I'm literally in my trading account trying to play level to level and just get those quick wins, and in my investing account I play the narrative plays because that's how I feel like that is a good strategy to use in this situation. When there's a lot of uncertainty, you should go with the things that you're more certain with and that you have more control over. So that's the game plan. And so let's actually go into Bitcoin. I'll do the top-down analysis, and I will do this and then give my thoughts. So 1 second. Okay, so because it's been such a long time since I did a market update, I think some bigger picture, higher time frame things are in order. So I just want to go over a couple things. First off, let's talk about the price drops of the previous cycles and where we are now. So you could see back in, let me scroll this up right here. You can see back in 2013, we had a price drop of 85.83% from the top to the bottom. Actually, technically, we had a price drop of 91.49%, but it was 86%. It was 86.21 from the top to the bottom of the cycle, right? 86%. And that took approximately 608 days before the next bull run started, okay? Then the next cycle top that happened in 2018, that took a drop of 83.84%. So first it was like around 86%, and the last one was around 84% top to bottom, which happened 1 year later, 1 year after the top. The last one happened, sorry, let me actually do this again. Let me see how long this took. Okay, yeah, so the first top to bottom took 608 days. 608 days. That was the top to the bottom before we started going up and really going up. 608 days. And that was equal from the top to the bottom before we started going up at all, right? The next one in 2018, it was 365 days. So it was 1 year. So it was almost half of the length where we reached the bottom before we started going up. And then we had, the corona, we had all these things, and the bear market wasn't really over, and we ended up going back down again. Back down, we had the crash in March 2020, and then we started going up. So really it took 821 days to really get to the bottom before the market started shooting up again. But if you want to count how long it took to get to the lows, it was only 365 days. It was only 1 year, right? So in one respect, the lows took less amount of time to get to than the previous cycle. But in another respect, you would have still had to hold on for quite a long time before we started the true bull market. I think something like this is probably going to happen this time around as well, because I don't think that a new true bull market is going to happen in 2023. I think it's too early, maybe in 2024. But we got to have the regulations. There's too much. Until regulations occur at this point, we're never going to have another bull cycle, because everyone's going to be too scared to go into it unless it's regulated. And that's the truth of the matter. And that sucks, because like last cycle was the last cycle that you could get in without regulations. And now we have to wait. Now it's a waiting game. And who knows how long it's going to take the government to come out with regulations. Could be this year, could be next year. I don't know. They're putting their foot down, and they're really coming after it, and we're going to see what happens. But just going based off of the charts and what I'm doing right now, the first one was 86% drawdown. The last cycle was 84% drawdown. And so far this cycle had a drawdown of 78%, right? So it hasn't reached that 80% drawdown. That 80% drawdown would be somewhere around 13, 14, like 13,500. About like $14,000. That's 80% drawdown. That's the 80% drawdown that I'm really looking for, because not only is that the 80% drawdown that seems more likely to happen, but it also coincides with the area where miners become very unprofitable. And this is the 88% retrace. The 88% retrace is like 12,600, but 14,000 is close enough. So it all coincides. There's a lot of things that coincide right here around this area. So that's really what I'm looking for. Not only that, but on the monthly chart, these were the highs close of 2018, and this was also the high of 2019. So we have a lot of confluence around this, $13,000 to $14,000 area, and that's honestly, that's where I was just going to go all in with everything. I already sold one of my properties and got rid of that to go back into Bitcoin when it fell down to the 20 something thousands. So if it comes down here, maybe I'll just sell everything else that I have and then I'll sell my car, or I'll sell everything and just put everything into it right here and just wait. So yeah, I'm honestly, I'm still waiting for this. However, this is of course a potential bottom. This is potentially the bottom. So we don't know. We simply don't know. However, I would say there's still, it's like, it could be a 50-50 chance. It could be a 50-50 chance that this was the bottom, or that the price retraces back down and we hit that $14,000 level. I don't think we're going to 10K. I really don't think we're going to hit 10K. I don't even think we're going to hit $12,000, to be honest, because I think there's a lot of people waiting for $12,000 to hit. And I don't know, every single time that I had a level plotted out and I said, I'm waiting for this level to get hit, I've always been front ran. Like every single time I've always been front ran. So I really think that 12,000 is going to be front ran. And I would guarantee that $10,000 is going to be front ran. So yeah, I would say 14,000. If it reaches 14,000, that's the time to just, I'm going to be going all in and not looking back. So that's the big picture. That's like the big picture stuff. Okay. And so we have that. The other thing that I want to say is that, the RSI is ticking up. The stochastic RSI is ticking up. The MACD is ticking up. Like things aren't looking too bad, on the monthly chart. Things are looking pretty good. We are at the monthly resistance though right now, which means that we can come down potentially to 20,500. Normally you don't really get like these retraces, but I mean, it does. I mean, remember what happened. Let's look back. Let's look back here. Price shot up. It shot up again. No retrace. 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 Like months and months and months of it going up with no retrace. Let's go to the weekly chart. Actually, let me do this weekly chart. This is my weekly chart, and let's go back to what happened previously. Like this is what Bitcoin's sort of known for is like just going up, 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 no retrace, no retrace, no retrace for weeks and weeks and weeks at a time. Huge move up, consolidation, no retrace really whatsoever. 1, 2, 3, 4, 5 more weeks of up only before one move down, 1 week down, and then another couple of weeks of it moving up before finally, retracing. So I think that's more likely to happen than us getting like a perfect, let's take this, like perfect fib retrace to $20,000, or $19,400, 61.8. I don't see this 61.8 getting hit. I think that most likely $21,230, like the 38.2, like this right here. I think this is the most likely thing to get hit. And let's see, low 21,366, 21,400. Yeah, this has not been hit yet. $21,230. That's the 38.2, and that hasn't been hit. So I'm thinking on the like shorter term, we do end up coming back down and sweeping this, going to this area, this 38.2 area, and then continuing our move up to first, 25K, and potentially this area right here around $27,000. I think this is really my target. This is what I really want to get hit. And so with, the big picture stuff, I wanted to mention that because it's been a while, but from now on, I'm just going to be doing like the smaller time frames on these videos, except for maybe like once a month at the beginning of the month. I'll do the higher time frame stuff. But yeah, so knowing all of that, what do we really see here? We see that we are in an uptrend. Obviously, we had that market structure break. This was the previous, market high, and we busted above that. We consolidated and we moved above that. So this area right here, this area is the consolidation. There's usually a move up, consolidation, a move up. So if the price comes back down to this area of consolidation, a lot of people wish that they got in here and they didn't. So if the price comes down, they're going to get in. They're like, people will buy this up. So you saw it. It was front ran a little bit, which like I understand. but I still think that this structure right here is overall bearish. And if we look at the 12-hour chart, you could see that the price does have a bearish order block right here on the 12-hour, lines up at 23,111, which is only 4% higher than where we are now. I'm not even sure that we'll get there, because on the 4-hour chart we have this bearish order block right here, and this one, if I do this and then make this template bearish OB, this is at the 38.2, right? So this is at the 38.2 and the 50, which, are two very big fib levels. So I really think that we get rejected from here. Like, I'm feeling that we get rejected from here, go back down and touch this area, this order block right here, this bullish order block, the down move before the move up that broke this market structure. We've never come down to retouch this. And this is what I want to happen, because not only can we retouch this, but it brings us into the support instead of getting like front ran. This just seems a little early to me. And let's look at the fib. Let's take the fib from the bottom to the top. Yeah, from the bottom to the top. And look at this, 38.2. So this is the 38.2 from the actual bottom to the actual top, like bottom to top. And if we go back to the 12-hour, maybe we have to do it from the daily. Let's look at this. Take the fib from right around here. This seems right good. And then this seems like the top for here. This is the 38.2 for this move. And that, like, yeah, I mean, that falls within the bullish OB too. I think we hit the 38.2. And so taking the Fibonacci on the daily time frame from the swing low to the swing high, this is the 38.2, and we have not touched that. If we take it on the 12-hour, same thing. Like, even if we go to the higher time frame and take it from the, obviously, if we take it from the low, we haven't even come close to the 38.2. I mean, that's a no-brainer. But yeah, you could say that we could take it from the extreme low, right, like down here, and now we touch the 23.6. Yeah, like we tag the 23.6, move up a little bit, come back down to the 38.2, which falls in line with the range low, and then we move back up. I wouldn't put the fib like right there. I would go to the daily chart and I'd probably put the fib there just to be like super accurate. But yeah, I mean, this area, just maybe we move up, maybe we just literally rock it up from here. I have no idea, but I'm just saying that, like, I would rather get in at $21,215.17. I'd much rather get in over here than get in like right here coming into this bearish order block, because if you look at this, we had this consolidation, we had this distribution phase up here, fell down, and then on the 4-hour, we have this bearish order block right here. And that also falls in line with the 12-hour bearish order block. So we are in a bearish market structure. So this candle right here, this big candle broke the bearish market structure, went down, it created a low, created a high, broke the market structure. So until we get above here, I wouldn't really like it. But honestly, until we get above here, then I would feel much more comfortable. It's like above here, basically above the 61.8. On the lower time frames, yes, of course we're bullish. So we have this move right here. This is the bullish market structure. Break it. So if we come back down, you could really honestly just get in anywhere over there like that, and then target these areas. So this would be what I would be looking for, something like this. And that's actually a really good trade. So I would be looking like this. Okay. And I would target 1 would be here. Target 2 would be there. That's how I would play a move back down right here with a stop, with a stop right there. And so that's Bitcoin. And the other thing that you should look at to see whether to get into Bitcoin, Ethereum, or some alts would be the Ethereum/Bitcoin chart. So let's look at that. Okay, so now I'm on the the Ethereum/Bitcoin chart, and what you could see is that typically once we've been in this range since May of 2021, where we had the initial high of the market, and we've just been ping-ponging back and forth. We had a deviation. First, we had a deviation above the range. Let me go to the weekly chart. It's easier to understand this. First, we had a deviation above the range, above this range high right here. And that obviously happened in November, December, during the high. This was the fake out. And then we came all the way back down. And in June 2022, this is right by the Ethereum merge, when Ethereum actually went up quite substantially. We had the deviation below the range. And then we had the move up. Let me just actually put this, let me do this. Make it a little bit, actually, yeah, I'd say this is pretty good. Anyway, so yeah, we have this deviation above, deviation below, and then we had this slight deviation right above here. And now we're in the middle at the midline. So we're at the midline of here. If it comes down here, you can see I have a bunch of alerts in. I have all these alerts in because this is okay, if it comes down here, I'm getting into ETH. I want to get into ETH. And I'm going to use, I'm going to start buying spot ETH. And also I'm going to be looking at cryptocurrencies against their Ethereum pairs to see which one is going to outperform Ethereum, because I think Ethereum will outperform Bitcoin. So if I could find alts that will outperform Ethereum, then there you go, it'll be better. So honestly, I'm just waiting for this area to get hit. This is what I want to get hit. I want it to come down into the support. That would be really, really nice. Of course, also there's this huge trend line right here that we have for Ethereum. So if let's say it comes down and it does a whole bunch of stuff, and then it comes down to right here, and it's so close to this huge diagonal trend line, and it's at the huge, horizontal support, that would be the most ideal buy for Ethereum ever. I would just go all into Ethereum right then and there, and that's what I'm waiting for. But obviously this is the weekly chart. There is still a lot of time for it to pass, and I don't know what's necessarily going to happen. So I'm just waiting. To me, this is no man's land. I guess what you could do, if you wanted to look at it right now, is you could plot out this range. This is obviously some major support, major liquidity down here. Every time that it's come down into this area, even all the way back here, and even over here. So this is clearly a big area, and it hasn't reached it yet. So that's another thing. The Ethereum Bitcoin chart is another indicator that I use or another chart that I use that sort of indicates what the overall market is. I think is going to do. So once this reaches here, then I think it'll be good to I'd be more confident in going into trades and stuff. It's not there yet, so I would much rather wait. Although even though this chart is going down, that's only because Bitcoin has been outperforming Ethereum since January 10th. Yeah, since January 11th, January 12th, Bitcoin has been just dominating Ethereum, right? So let's go back. Let me just double check this real quick. January 11th. Yeah, so this is Bitcoin right here, right? And Bitcoin shot up. Ethereum also has shot up, but obviously it would have been better to be in Bitcoin compared to Ethereum. And you know what? If you would have used this chart and you would have said, oh, hey, look, this right here is... Where's red? Here it is. This right here is resistance. It's the Ethereum against Bitcoin chart is coming into resistance, but I think that the overall market is bullish. Then what you could do is you could choose to go into Bitcoin as opposed to going into Ethereum, because Ethereum against Bitcoin is at the resistance, although the entire market is going to go up. So that's what would make you choose Bitcoin over Ethereum in that case. But once this comes down here, if we could come down here and get a nice bullish candlestick formation or a swing feather pattern or something like that, underneath and close back above, then that would make me really bullish on Ethereum. And if the overall market is looking bullish, then I would definitely go more, I would stack into Ethereum over Bitcoin. And so that's, that's how I'm playing this. I'm waiting until it comes up here. And you know what? This area was a really big area for it. So I'll put this like this as well, just to have it. And I'll put some alerts in to notify me when it comes down to this area, so I could take a look at it to see if there's any type of bullish formation that happens. And so now looking at ETH on the monthly chart, the higher time frame chart, we could see that it did come down. Let me go this came down. We'll do the same thing that we did with Bitcoin with Ethereum. So this came down 81.89%. So basically 82%. And last cycle, Ethereum actually fell 94%. So Ethereum fell 94% last cycle, and it only fell 82% this cycle. Like, if we're basing this off of how far it fell last cycle, it still has quite far to fall, a lot further to fall. If it were to fall, let's say 90%, if it fell 90%, then that would put it down. That would put it down at $480, $500, somewhere around there. Personally, if Ethereum comes down to $663, that's where I'm going in. That's where I would go all in, because this is the 88% fib level, and just the 88% is my level that I use to go all into everything when I think there's a huge bullish case for it, and I'll just hold it. I don't care if it goes down further than that. That's plenty for me. So yeah, just like Bitcoin, I think Ethereum still, 50-50 chance that this was the bottom or not. But potentially, I do think that it will turn over. I mean, I'm still leaning towards the fact that it comes back down, and I could get in at 600, and maybe I'll go in at 700 just to like front run it a little bit. But yeah, if we look, this was the old close for Ethereum in 2018, right? And it tapped it. It not only tapped it, it actually went below it, and then it tapped it again before moving back up on the monthly chart. In the price. For Bitcoin, it never reached here. For Bitcoin, it only reached the top. It only reached the 2018 highs. So let's just look at that really quickly. This is the 2018 highs. This is the 2018 close. And it obviously touched the 2018 highs right here and fell below it, but it never actually touched the monthly 2017, 2018 close. And if we look at the weekly, and just go back to the weekly chart, right here, it did touch the weekly. Yeah, so it fell underneath the weekly, but it never did the monthly, and also it never fell down to the 88%, and it never fell down to these support areas over here. Just never fell down there. And so going back to Ethereum still, was this it, or believe this was it? This was it. Yeah, Ethereum, it reached the weekly highs, but it didn't reach the monthly highs. So same thing. And I would want it to reach the monthly highs. So yeah, 88% is what I'm looking for. However, because this is a trading account, and it's a trading challenge, and my YouTube is all about trading, I'm not waiting. I'm not just going to wait for this. Okay, I'm going to trade level to level. I'm going to play level to level. I'm going to try to make money no matter what, So whether it's going up, whether it's going down, whether it's going sideways, whatever, that's the point. So let's plot this out, right? We have the run up from the merge. We have the crash back down into the support area. We have the move back up, and now we're at this resistance. We fell below again. We crashed underneath this. Actually, let me do this on my actual on the chart where I trade with, and we ended up crashing below the trend line. The trend line, bunch of liquidity, was pushed down here, so we crashed below it, sucked up all this liquidity, crashed even below there, and now we had this nice move up. But now we have this trend line that is going to act as resistance, and not only that, but if we take the fib from the top to the bottom, yeah, that's around the 61.8%. That's like in the golden ratio right over here. Just on the daily, let's go down a little bit further to the 12-hour. To the 12-hour, Ethereum's looking a little bit better than yeah, actually, wow, Ethereum looks way better than Bitcoin. So even on the all the way down to the 4-hour chart, we really don't have, I mean, this is the bearish order block right here, but I mean, by that point, it's, you know, we're back in the range and we're doing good. Like, I don't know. I wouldn't really want to wait till it's up there. So what am I looking at here? Let's see what I think for the short term. Well, I already mentioned that for the short term, I think we're going to get a little turnaround and go back down and hit the 38.2 for the move up. So going back to Bitcoin, right? We had the fib from the bottom to the top, and that was where is it? That was oh my gosh, my computer's so slow. I need to get a new computer because this is like unacceptable, you know, with how slow this is. But go over here, bring this way. What the heck? All right, one second. There you go. Okay, so we have the lows up to the highs, and the 38.2 is right here. So we have not reached the 38.2 on Bitcoin. On Ethereum, though, we take the lows to the highs right over here, and we did tap the 38.2 on Ethereum. So we did tap the 38.2 on Ethereum. Not from the low, not from like the actual lowest low point, but Ethereum was just fluctuating a lot more wild. I mean, from the low lows down here, we still haven't reached it because it's, you know, 1500 and we only reached, it's 1,451 and we only reached 1,470 or something like that. So yeah, we still haven't reached the lows for Ethereum or the 38.2 for Ethereum from the lows, but we have reached it from this area. And this is, and honestly, this is where I would take my Fibonacci. So maybe we come back down, and on Bitcoin, we touch the 38.2, and on Ethereum, we touch the 50%, and then we move up from there. That seems more like a possibility to me, unless this was it, and we just simply move up from here, and it was, you know, this was the range, and we simply are, you know, we went below the range and deviated below it, and now we're back above it. And now, typically when that happens, if you're supposed to go into the lower time frames, and let's say that this was the range, right? This was the range low, this was the range high, and it goes below the range low, wipes it out, sucks up the liquidity, moves back above it. Honestly, as soon as it went back above it right there, that's when you long right there, and you target the mid, which is 1592. So I could definitely see it popping up to at least 1592, and this would be my target. But right now, where it is, it's like it's in no man's land for me for a trade. I don't want to trade this. I don't want to trade this right here. It's in the middle. If I want to trade it, there's two areas where you should trade: the support, aka the demand, and the resistance up here and down here. And honestly, the resistance was so easy to tell this was resistance. I can't believe I didn't recognize this because, well, I wasn't even here. I was in North Carolina, so I wasn't really paying attention to the charts. But I'm back in the charts now, and like I'm super focused, so I'm gonna be charting every single day. But yeah, like look at this. We had the swing high, the low, and then we made a higher, basically a higher high right here, higher high close, which was great. But then this candle was a swing failure pattern on this, which means that, and then this right here was a bearish candlestick. So we had a shooting star, which was a swing failure pattern for the close, if you're looking strictly at the close. So we should have right here, we should have closed above here, but we didn't. We closed down here. So that made this very, very bearish because this happened, create a shooting star pattern in the resistance area. That's super, super bearish, right? And then when it came back up, so what you would do is you would put on a short position, literally like right here, open up the short, stop goes right here. And then when it came back up, this probably freaked a whole bunch of people out who did put their shorts on right here. But when it came back up and it formed this right here is a shooting star again on the 12-hour, you know, sort of a high time frame, shooting star, swing failure pattern above the high, above the swing high, not just the close, like how this one was a SFP above the close. This one was a SFP above the high. That's an automatic in the resistance, swing failure pattern, shooting star above the high, immediate short position. Yeah, immediate short position gets put on right here like this. Target the mid. So you would target here. This would be the first target right here. That would be a 2.22R. And then second target would be the low, which would be down here, which would be a 9.53R. A 4.84R. So it would end up being, you know, somewhere between a 5 and a 2. So it'd be like a 3.5R trade. So solid. Why I did not see that. Well, I already said why I didn't see it. I wasn't here. But yeah, that would have been sick. So I'm definitely want to make sure that I see these more often. So I'm definitely going to be looking at the charts more often. Now that I'm here, I'm not on a little vacation. And so this is the support. This is the resistance. Comes down. It had the deviation. So you target the mid right here. Now the question is, here's the question. Is it going to come up to the mid, consolidate a little bit, and then just shoot up to the top? Because typically, if there's a deviation like there is right here, you target the mid and you target the top. Just how like there was a deviation right here, you target the mid and then you target the low. And that's your game plan, right? So now that we had the deviation on the bottom, we target the mid and the high. However, because we had this very, very strong diagonal resistance, now what happens when the price comes back up, you know, hits this resistance, which happens to fall in line potentially at the 78.6, or if we bring this down here to the 4-hour chart, bring this down to the 4-hour chart, and then you could actually bring this down a little bit further, potentially 78.6, or I was thinking that it could hit the 61.8. Technically, you have 1 touch right here, 2 touches right here, 3 touches right here, 4 touch, 5 touch, 6 touch. And this is pretty close to the 61.8. I'm just saying there's a lot of resistance in this area. The stochastic and the RSI and the MACD are all getting overbought, at least on the 4-hour. The 12-hour doesn't look too bad, but by the time it reaches this area, it's gonna move up. And then maybe we could form a W. We come back down here, form a W. I wouldn't trade. Basically, this is untradeable. I want the price to come here or here. That's what I want. Or maybe if I see a pattern like this in up in the midline, then at the 61.8, then I would get in a short position. I would target down here. Those are the only 2 things. So this is a very good lesson. You don't always have to trade. There's no trade going on right now. There's no trade. What's one trade that you could say? One trade that you could say for Ethereum right here is this one. It's the 4-hour bullish order block. Get in right here. Stop goes right below it. Target the mid. Here's a trade. This is a trade. Why is this a trade? This is a trade because price came down. Actually, no, this wouldn't even be a trade. Sorry, this wouldn't even be it. This wouldn't even be it because this right here, let me show you this. This right here was the move up before the move down that broke the market structure, right? So this right here was a bearish order block. Price should have rejected from this area. So this is a bearish order block, right? Right here. The price was moving, right? It was moving down. moving down, lower lows, lower highs, lower lows, lower highs, lower lows, boom, broke down below the low. And I don't even count the lows as the market structure. I count the closes of the market structure. So right here, when this broke below this close, this was the market structure break. This was a bearish market structure break, meaning that this was a bearish order block, meaning that the price should have came up and you should have put and a short position would be put on right here, and you would target even lower. However, if we're using the playback tool, the price, you could see, simply just shot right up, and it just completely did not care that this was a bearish order block, which means that this is now a bullish breaker. And if the price came back down to here, this is where you would get in. So you would look for some type of candlestick pattern formation, something along the lines of that right here. And if the price fell below, then you would no longer be in the trade. So this would be the trade that you would put on for Ethereum, which is still honestly a really solid trade. This is a solid trade. So yeah, this would be the trade that I would look for Ethereum if it comes down here. I like this one. Ultimately though, I mean, I wouldn't be surprised if this fails, but it's such a good RR that, you know, you sort of have to take it. And yeah, maybe the 1 hour has something else as well. Maybe there's something on the 1 hour. On the 1 hour, let's see. I mean, on the 1 hour, this was the bearish order block, right? Price came down, it moved up for the move down that essentially broke the market structure right here, right? So like this was the bearish order block, and then when it closed above it, like right here, it became a bullish breaker. So you could have just market ordered, you know, right there. And that would have been fine. Another thing is to look for bullish, you know, bullish candlestick patterns in these areas. I don't really like seeing I like seeing hammers. I like seeing dragonfly dojis, inverted hammers, shooting morning stars, like those type of things. So if I see that in a support area, I really like it. So there's a lot of different things that you could do. So I'm gonna put this on. I'll put this on. I'll give it a shot because it follows the rules and it's close to the supports, close to the big support in this range. So I like this. Target the mid, take it from there, and then potentially have it roll back over and reach the higher time frame, higher time frame, basically like liquidity. Although I don't know, like I would much rather do this. I would much rather put this on than put something on for Bitcoin. And so that's Ethereum, okay? And this is honestly, I feel like this video is so freaking long. Like I went through such a high level like overview of things that I'm going to cut this video off now. The only thing that I want to say is that I have all of these other coins, and I'm going to be looking at all of these, and I'm definitely going to be looking at my watch list. So I have my watch list, and yeah, some important thing that I wanted to say was that for coins like OP, like this is new all-time highs. This is what we call blue sky territory. So I would much rather be in coins that are new like OP that are in all-time highs, because there's no overhead supply of people that are waiting to sell. Like no one bought up here. Like this is all everyone that bought down here, right? So these don't have the sell pressure that the other coins have. So I really like OP, and I really like GMX. Well, actually, wait a minute. Let me just double check that, because I know GMX was also on Coin. Yeah, so I really like OP, and I really like GMX. And I like other coins like Filecoin, because it's coming out. It has some updates coming out. Atom has updates coming out. And then, of course, Mina, IMX, Loopring. These coins fit the narrative, so I like all of those. And yeah, that's basically what I want to say. So I'm going to make another video right now. I'm going to go over these coins, just strictly going over alts, and I'll just name it going over a bunch of alts and putting trades on. for altcoins, and I'll do that. So thank you again for watching. I'll talk to you in the next one. Keep on stacking those sats, keep on making those gains, and I'll see you in the next one.